Let's move on and talk about the chemical space because a couple of chemical companies have actually reported a good quarter after a long time. The next management on our radar is Vinati Organics. The company saw a steady performance in the third quarter. Revenue registered a double-digit growth. There was sharp margin expansion as well. To talk about this and the trends ahead, we have Vinati Saraf Mutreja, MD at Vinati Organics. Great to have you, Vinati, with us. So, that's exactly what everybody is trying to figure out, that whether it gets better from here. But before I talk about the numbers, something else caught my eye. Apparently, you are setting up a subsidiary in the US. And perhaps you'll be looking at some manufacturing there as well. So, I don't know, is that a step forward to de-risk yourself just in case there's some tariff action here and there? Let's start there by understanding this expansion in the US that seems to be in the works.
Yeah, well, the subsidiary in the US is we export a lot of product to the US, and some of our customers expect us to have a warehouse, as well as sometimes we need to restructure the product, do some reprocessing. So it's purely for that. I'm not really sure if it's anything to do with the tariffs, given transfer pricing and all of that, but it's just purely to service our US customers better.
Fair enough. So it's not like you're thinking of manufacturing in the US. It's a warehousing facility to better serve your customers.
And maybe some reprocessing as well, yes.
Some reprocessing. These days, whenever an Indian company is sort of thinking of better on-ground, onshore presence in the US, you've got to ask whether that's forward-thinking to mitigate any tariff issues, right? Never know what's coming next. But anyway, let's talk about the business now, because the business has been looking really good. We'll get the numbers up on the screen. 17% top-line growth for the quarter gone by, and 19% if you're looking at the 9 months, and there's margin expansion as well. So let's walk us through this. I mean, is it volumes, is it better pricing, or is it both?
No, it is purely volumes. Last year was a subdued year, and most of our products have seen growth this year, especially ATBS, butyl phenols, as well as antioxidants. And I expect this momentum to continue going forward.
Okay. On ATBS, you're also commissioning a new line, right? I mean, there's new capacity that's coming on stream by, I think, March or April. So what are the volume projections then as that starts going on stream?
Yeah, absolutely. That increases my volume capacity by about 50%. And that is expected to come on stream by Q1 of FY26. It's a 20,000 ton capacity. We do expect to reach full capacity utilization over 3 years.
Okay. What can you sort of tell us about pricing? Like you said, right now the improvement is entirely volume-led. But is there any scope, I mean, any sort of sign of some movement on pricing as well? What are customers saying?
No, see, we function, as you would say, at an EBITDA margin of 26%, 27%. And I think that's a healthy, sustainable margin for a manufacturing company. So to expect a price increase or a margin improvement, I think we are more focused on adding new products, expanding our capacity, and going for a volume growth by making our margins.
So your margin, speaking of margins, the margin bumped up to, at the EBITDA level, bumped up to 27% in this quarter. So is that a one-off, or is this a new level where you're hoping to run, at which you're hoping to run?
No, I think in the range of 7%, again, depends on, there was some raw material fluctuation. There could be some RMC price that comes down with the quarterly lag, which affects, the next quarter. So this range is quite sustainable for the next 3 years.
Okay. Got that. I think we're having some issue with the video, which is kind of conked off for now. This new ATBS plant that has been sort of commissioned, Vinati, morning, Prashant here. What will the contribution be from ATBS in 26?
Yeah, ATBS contributes about 40% of our revenue now. And next year, we expect to maintain that percentage because a lot of the volume growth will also come from antioxidants and butyl phenols, as well as BOPL, our subsidiary, Vinati Organics.
Okay, fair enough. And you've already spoken about margins on revenue CAGR. You've said 20% CAGR is what we should expect. No reason to change it?
No, absolutely no, because just given the momentum in our products and the new products coming on stream, I think we maintain a 20% revenue growth.
Vinati, just a quick, word on China. The industry had been complaining about, heightened competitive intensity. I don't know how that's playing out. Is there still a lot of import coming in from China? And are you expecting anything in terms of, policy measures like the steel guys are asking for safeguard duty?
Well, in PTBP, the butyl phenols as well as antioxidants, we do see a lot of cheap product coming into the country from China. And we have approached the government for some trade remedy, but let's see how it pans out. I think there's still time for them to make a decision.
All right, Vinati, we'll leave it there. Thank you very much for joining us. Good luck to you, your team, as you execute, and we look forward to our next chat. Thank you.